top three things in my notebook this morning, it really could be number 1, 2, and 3 oil, but I'll go with oil number 1, number 2 U.S. dollar, and number 3 the S&P 500. First on oil, obviously we didn't have airstrikes by Saudi Arabia and the USA into Crete in the model, but that happens, and that's what moves the oil market in very short order here. We're getting what I have scored as a 4.8 standard deviation move on my immediate-term trade duration, which sounds like a mouthful, but it is the math. So it puts oil up at the top end, tippy-top end of its risk range. Currently now the risk range is $10 wide. 42.39, 42.39 for WTI is downside support with 52.28 as upside resistance. We do not have oil on the long side, which makes us wrong this morning. My sense is that a lot of people probably have that wrong, but the reality is that here's a great short-selling opportunity in oil. Second point would be the dollar. We're probing the lows here. The bottom end of the risk range is just north of 96 on the U.S. dollar index. The trend line of support for the U.S. dollar index is closer to 93. So I'm not changing my bullish view of the U.S. dollar. I'm certainly not changing my bullish view of having a big cash position either. Those certainly have buffered at least the pain that you could have had yesterday if you're long things like tech and biotech specifically. But again, if you're looking at for what it is, the risk range for the U.S. dollar is also becoming almost as asymmetric to the upside as oil is to the downside. The final point that I'd make in the top three things is the S&P 500. 2084 was the immediate-term trade line. That is broken. So what was support is now immediate-term resistance. So the futures have you below the trend line, below the trade line, and again, that's obviously a very bad thing if it were to hold. Now, what would be the catalyst? Earnings season, McFly, global growth. I mean, there's a lot of reasons, obviously, that deflation, I think we've outlined what the risks are. If you can't get back above 2058, this will turn into a bearish trend, potentially for the S&P 500, with it being down for the year to date, bonds being up, of course, on the long bond side. So those are my top three things.